Okay, so these are the best opportunities to trade in the market. As I told you guys already, we was targeting this level of liquidity down here. This is the main level of liquidity we've been going for. When prices up here, I mentioned to you guys quite a few times in some of my previous videos that this is the area of liquidity that price will be targeted. This is on a weekly chart, and as you can see, we fell aggressively to target this area. Now that we've swept liquidity, we can see a reasonable bounce. I do want to try and get positioned into this market, but I don't want to be aggressive in my entry. So what I'm going to be doing is this area right here. This is Asian session highs. So if we get a close above Asian session highs, I will have the green light to buy within this fair value gap. That would be my entry signal to try and position into the market, and that would be a long trade up until here. So we could get a reasonable bounce. That being said, I don't want to try and catch a falling knife. That's why I'm being patient with the entry. It is 12 p.m. UK time. I'm awaiting pre-New York session open, so I'm gonna wait to see what price does as we approach 1 p.m. and at 1 p.m. we should have a signal. If price closes below this white line, Asian session liquidity, and this can count as a sweep of liquidity, and price could be targeting further lows, which would make sense because we do have liquidity resting here. That being said, we don't have to target that area just yet. What we could do, and what I'm hoping we do, is we get a close above this area so I'm able to target the market up until this level. And we could see some sort of reasonable bounce. I mean, the price has declined so much that it's providing such an amazing opportunity to try and buy the market back up. That being said, I don't want to be exit liquidity for people who are looking for short trades. So I'm going to be patient on the entry. If I get a signal that's worth taking, which would be obviously a close above the Asian session high, that would confirm to me that there's further bullish momentum to continue higher. And I'll just be buying below this fair value gap, but it will be an optimal entry because it will count as within the fair value gap and price should rally straight through it. That's what I'm hoping to see in pre-New York. So I'm waiting to see how this closes in the next 26, 27 minutes. That being said, if the market does not close above the white line, then we could see further down movement. So I'm being very, 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 very malleable, very, very reactive to how the market presents its signals to me. Um, Obviously, I mentioned that this was the liquidity level that we was looking at. So after the sweep of this liquidity, I am expecting some sort of bounce. It doesn't mean that this is the low of the market. Although we are sweeping liquidity, it doesn't necessarily mean this is the low of the market. When we sweep liquidity, all we do is target a next level of liquidity, and that next level would be this fair value gap. This is where institutions are looking to position due to a lack of volume. So I'm expecting price to bounce back in here before we short the market down. So what that's gonna look like, came back here, bounced off liquidity, pulled back, and now we continue lower. That's the optimal trade that I'm looking for. That being said, because the market's been declining so aggressively and we're basically in a stock market crash scenario, there is a chance that price does continue going lower. And if we do continue going lower, we have we don't have that many levels of support on the daily chart. Although we do have fair value gaps, they're not optimal as the market's been declining so aggressively. But I have to say to you guys once again that this is amazing times to be trading, especially when you know how to trade. This is the most optimal time to be trading. There's a lot of volatility in the market. If we take a look at the VIX is at 47. This is one of the highest levels you see on the VIX, and the VIX basically just represents fear in the markets. The higher the VIX, the more fear. But we can see this massive red candle, so this could be indicating a decline in the VIX and further upward momentum in the markets, so that we could get a repositioning up here. So that's what I'm looking at. Going into New York session, hopefully we can get a trade opportunity today and make some money. But yeah, I'm gonna update you guys when we get a bit more clarity on what the market's gonna do, and I'll let you guys know when I'm getting positioned. Stay tuned. Yo, guys, I'm back with another part of the video. I was talking to you guys earlier in the video in regards to, price closing above our Asian session high. So I looked to get into a trade and I got stopped out, and then which was this trade here. I'll show you guys. I got into this position and I got stopped out. 429. I'll show you the entry, but I won't actually. So after we got a close above here, or prior to getting a close above here, actually, I saw that price was pushing higher. So I got into a trade around here, and I saw price close above. So I placed my stop loss right here. And as you can see, you know, so the entry was on this candle. I got into the market, placed my stop loss. I got wicked out down here, but price came into a fair value gap, swept liquidity, and rallied higher. So following the close of that candle, I entered another position inside this fair value gap. This was the optimal trade that I was looking to get into, and I wanted to see price push higher on this candle and rally and close as a green candle. So I wanted to see this candle close green. We didn't get a green candle, unfortunately. Um, and while this happened, I did another position right at this fair value gap here at this low. I did another position. What happened was I ended up just closing the trade out, both the trades out, with $4,000 in profit, so 3% on this one and then 1% on this one. And then right as I got out of the market, the price shot all the way up on this candle. which is alright. I don't mind. I took my 3%, so I'm at 3% on this account. But the markets are extremely choppy right now. As I mentioned to you guys already, I was expecting us to get quite a ferocious bounce in this fair value gap, which we did get. So that was a nice look. I was expecting a bounce today because, as I mentioned already, we swept liquidity down here. So there's no point of trying to, fight the market and fight the tape. If you look at what price has done today, it's been extremely messy. We've gone up, we've gone down, we've gone up, we've gone down, we've gone up, we've gone down. You know what I'm saying? So I just took my profits and closed the day out 3% up. I'm not looking for any more. I wasn't looking for any more trades today. However, I'm expecting a bottoming process at this low. I want to see price go back up. I'm sure we all want to see price go back up. So I'm waiting for a signal on the daily chart. That could be as simple as a red day tomorrow and then a green day on Friday. So that will look something like this. You'll see this would be a break of structure after this close, and then I'll be looking to position long. That's the signal I'm waiting for. But today's been a messy day. I'm just happy I was able to close the day in some profits at least. But I'm up 3%, so I really can't complain. But if we do get this play out over this week, if we do get price to move aggressively this week, it will be extremely nice to see price move higher from here. Because once we do start moving higher, we're targeting the highs, we're targeting all-time highs. Obviously, there is going to be some hurdles in place, such as this fair value gap right here, and I will be watching out for that. But at this current moment in time, the price has come down aggressively, and it's down roughly. If we take a look at how much we're down from all-time highs, we're down almost 20%. We've been down almost 20%, which is pretty much unheard of. Like the market went down 20% in a matter of days. When did it start? It started on Feb 17th. We started a down move, and prices have actually been down 20% in under a month. No, just over a month. So I think we've had our correction now. I think price can start moving higher. If we do start moving higher, I do want to be positioned. That being said, there's no guarantees that price is going to go higher from here. We could easily just come back into this fair value gap, shift back down with a market structure shift, and price start being bearish again. So I'm considering reducing my position sizes, if only because of how volatile the market is. I'm considering reducing my position sizes. That being said, today was a green day. I'm happy with how I traded today. And yeah, I'll be honest with you guys. That first loss did kind of piss me off. I don't really like taking losses. Only simply because a lot of my trades are extremely high probability. So when I do take trades and they lose, I'm a bit shocked. I'm a bit surprised. Like, how can the market go against me? That's only because I'm extremely experienced at trading US30. That being said, it's been a good first day of the week. Obviously the goal is to make some more profits this week by catching a rally back up. So yeah, I'll keep you guys updated with how the week goes. I should be back with you guys tomorrow, but if I don't have any trades tomorrow, I'll still be back for an update. Nevertheless, it's TN. Alright, so welcome back, guys. Back today, Tuesday, the 8th of April, back with another part of the video. So, obviously, ideally, I would have wanted to be positioned here, but obviously, because I took a loss yesterday, I closed out the trade. That's why I'm currently sitting at 3% profit, which is all right. That being said, what I'm looking for at the moment is prices now rallying back into our fair value gaps. We've got two massive fair value gaps here. We've got one here, and then we've got a second one right underneath it. So I just combined the two. This is our two fair value gaps. As well as the two fair value gaps, we've got previous days highs right here, so we know liquidity is resting at this area. I'm expecting there to be a little bit of a build up of liquidity at this area before we do go up into the fair value gap, just so price has the momentum to try and come back down. But what I'm looking to see this morning, or this afternoon should I say, into the New York session is over the next couple of days, maybe today, maybe tomorrow, over the next couple of days, I'm looking to see a rally into the fair value gap, and then a decline from the fair value gap down. I'm just going to draw a premium and discount zone of this downtrend, so we understand where the optimal place to position would be. So we'd want to position above the 50% zone. So what I'm looking to see is price rally into the fair value gap, sweep previous day's high liquidity, as well as targeting the premium part of the zone, and then we'll have an optimal trade opportunity. Because of the size of the fair value gap, I'm going to be a bit more patient. I'm not going to get into any aggressive trades. As you can see, we're rejecting just underneath the fair value gap, just underneath previous day's highest liquidity, and we're rejecting just underneath the fair value gap. So this is indicating to me that price is building up liquidity around this area. So when we do finally sweep liquidity to the upside, this is going to be enough. There's going to be enough stop losses to help turbocharge the decline. So at this current moment in time, I'm looking for shorts. As you can see on the daily chart, we had a massive bounce yesterday, which is what I was expecting in anticipation of targeting our fair value gaps up here. It's going to be interesting what happens because the market is, I think it's getting ahead of itself, anticipating a bottom. It's like everyone's looking for a bottom. This bounce is going to be a tradable rally. I doubt it's going to be the beginning of a new bull market. I do understand we've dropped about, I think it's about 15% already from all-time highs. If you just take a look at that, I was more than 15%. We dropped 20% at its peak, but now we're about 13% down. So the market's getting a bit confident that price is going to start going higher. I don't believe this is the case. I think we're just getting started in this decline. So I'm going to be a bit patient in my entries, and then if we can get a price to rally into the premium part of this downtrend, then I'll be looking to position short. Um, the rally that happened today, quite an aggressive rally from our fair value gap down here, which was expected. And then as price rallies higher towards the fair value gaps, we should see a build up of liquidity in this area. We should see price trade into the premium part of the range, where we'll find our optimal entry to try and short the market down. That being said, I just want to take a look and see what's going on this week. So we do have news today. Well, not today. We have news tomorrow. We have FOMC meeting minutes, relatively important. But the main thing the market's going to be focused on is actually FOMC is going to be important because people's going to want to know what the Fed are thinking. So I guess this could be important. We also have CPI on Thursday as well as PPI on Friday. So the majority of the move could be pushed to the back end of the week. The majority of what takes place this week could be pushed to the back end of the week. So I'll be a bit patient in regards to my entries. I'm not going to rush anything, but if we do get a decline from within this fair value gap, we could be looking at the highs for the week, and we could see another aggressive decline downwards. So that's what I'm looking at today. I'm expecting this to play out over the next few days. Probably CPI being the catalyst for it, CPI or PPI being the catalyst for the decline. If this doesn't take place this week, then maybe next week we might begin our decline downwards after this bear market rally. So that's what I'm looking out to see over these next couple of days, going on to next week. At this current moment in time, I'm 3% in profit. I would have been positioned and held this trade, but because I came from a drawdown, I wanted to get out of drawdown, and I was happy with my 3% profit. So I made 4% on the trade after taking a 1% loss, which put me back in 3% profit on this funded account. So what I'm looking to do is I'm looking to reposition into a good optimal entry for short trades, and then we'll go from there. Nevertheless, I'll let you guys know what happens. Any trades that I take, I'll let you guys know. I'll see you in the next part of the video. Alright, cool. So I'm going to try and execute. This is a New York session open. We've just gone 2:30 London time. I want to see the market rally up into here. And if we can get a rally up in here, I'm going to see if we can get an entry on there. We're having a big green day today. Massive, massive, massive green day. Kind of pissed off that I exited yesterday, but that's how the market goes sometimes. Can't complain. Still up 3% yesterday. But yeah, I want to see the market go up, take out liquidity that's resting here, and get us into our premium zone. And then I'll be green light to potentially look for an entry. So this blue area is my H4 level of liquidity. Not level of liquidity, fair value gap. We've got two fair value gaps here within this larger fair value gap. So if we can get into here, I'll be looking to short the market down. As I mentioned already on the daily chart, we have liquidity resting here. And I'll add this dashed grey line so we know what we're going to. But yeah, this is how I'm trying to enter. This is how I'm trying to position. There's a chance the market just leaves me behind, but let's not rush anything. We'll see how things go. All right, so guys, I'm back in this video. I'm back to just do update again. This is what I'm talking about in regards to the psychology of trading. So as you lot can see from this, I took a slight loss right here. I got early entry. I got stopped out at 368, and then I got a re-entry in. Ignore this one. Had a wrong stop loss, but I got a re-entry in at 305 after I got stopped out at 368. I got a re-entry in at 305, and as you can see from this, I took my profits here at roughly around 2-1. So I made 2% on that trade. The reason I exited this trade was because of the psychology when it comes to trading. I didn't want to I wanted to make sure I made profit on this trade, and I saw a bounce and I thought, all right, we're going to rebalance at this level. There's a chance we go higher. And at the time it made sense, because if you take a look, when we bounced here at this area. I thought I'm going to exit, and then price bounce higher only to hold the moving average and continue going lower. But the idea of the trade was to get in, to hold it, to target the lows, and to potentially see price go lower. And obviously I'm a bit I don't want to say gutted, but I'm a bit pissed off that I did the same thing that I done yesterday again today. That being said, this one was a bit better because I made 4%, but on this one I made 2%. If I just held the position to my targets, it's a pretty much 10-hour trade just to the targets. But even holding it till now, it would have been 6 hours. So that means I would have made around $6,000 worth of profit on this funded account. So you can imagine what psychology is like in trading and how important it is to not just position correctly the first time, but when you do get a re-entry, and to manage your emotions. And
essentially I was risking, because it was a running profit, I was risking $2,000 in an attempt to protect myself from going into loss. Whereas I could have risked the whole $1,000. And when I say $1,000, what I mean is obviously based on my entry, 1% risk, $1,000 to make nearly $9,000 or even $10,000. So these are some of the things you have to deal with when you trade. Um, One thing I'll say is today I haven't really been busy. I've been home the whole day. Usually when I get into my trades, I've usually got stuff to do, so I'm out and about. And I don't really check the positions. So one thing I'll say is try to keep busy as well. Like if you keep busy, you won't find yourself messing with your trades. $8,000 pretty much I missed out on. Or to this current point, it would have been 5,000. It would have been $5,500. It would have been 6% profit. That being said, the markets are extremely volatile at the moment, and we did have a massive decline. So it wasn't impossible for price to rally back higher, but it's a bit bittersweet that I made money today, but I didn't make how much I would have I initially targeted to make. Um, but yeah, these are the best times to trade. This is the best some of the best opportunities you'll find in the market to trade when the markets are volatile. You see the type of price movements we're making today. Price rallied today at the open. Today's Tuesday. Price rallied today. Let's have a look. We went up over 1,000 points on the upside, and then we fell another 1,000 points. Or on the downside, it might be even more than that. Let's have a look. We fell from my entry nearly 1,400 points. So you can see the type of opportunities you have when you're trading the markets, and when you know how to trade, you can take 1 hour, 2 hour trades like I've been doing, and you can be profitable. I've been showing you guys how to trade over the past few weeks since I grabbed this evaluation. Well, I've done phase one, made 8%. I've done phase two, made 4%. I'm currently up 4% on this account, so that's about 16% just in the past month. I bought the evaluation on the 14th of March. This is the 8th of April. I'm up 14. I'm up 16%. Do you get what I'm saying? So you can understand how much money can be made just from swing trading and taking the highest probability setups. You don't need to day trade. You don't need to be in the markets constantly. You don't need to be in front of the charts constantly trying to make money. When the market presents you with the highest probability setups, these type of setups make you so much money. Imagine if I followed my rules obviously to the T, positioned in here, and done 10 hour on this trade up to here, which would have been up to here. And then I would have shorted it and done 10 hour, another 10 hour on its way down. You can imagine how much money can be made, and that's just in the space of one, two, three, four. Or it's not even, that's just in the space of 3 days. 3 days from the 7th, maybe it's 3 days, 2 days from the 7th to the 10th, which is to the 8th, which is today. You can imagine how much money can be made. Or in regards to how long I've been trading the evaluations, from the 14th of March, that's just over 2 weeks, nearly 3 weeks. So yeah, I do recommend obviously if you do want to learn how to trade the way I trade, um, I'm willing to give this away for free. Not enough people know about it. Not enough people are in the community talking to me about it. But if you reach out to me and you want to try this course, I am willing to give it away for free. Just leave a comment in the comment section, and you might be blessed with a free guide on how to trade. And on top of that, I will personally help you and guide you if that's what you want. Nevertheless, I'm gonna leave you for now. Take note.